Hi, I'm Garth McKenzie from traderscorner.co.za. This is your weekly look at the S&P 500 and the NASDAQ indices. So we start with a look at the daily chart of the S&P 500. And I have to say here that I got it wrong last week. I was looking for a reversal. We highlighted a big monthly reversal and a weekly reversal on the S&P 500. And I thought at that time that perhaps the market had made a short-term peak and that it was going to consolidate. That has turned out not to be the case. The market has actually moved higher over the last week, quite a lot higher. In fact, last week it was up every single day, and it's so far looks as if it's continuing higher into this week as well, and has continued to make new all-time highs now. So what you can see on the chart there is that upward sloping channel that has been intact since November. And last week I thought that it had broken down below the bottom of that channel, and that was the start of a more sustained correction period. It turns out that that was not the case. The market has moved higher. It's moved back up into that channel. And as you can see, the upper end of the channel is now marked there at 39.30. And it looks as if the S&P 500 wants to head up towards that area, and then we'd see at the top of that channel whether it stalls there and maybe begins a little bit of consolidation. But overall, still a very bullish picture. The market's above all of the moving averages. The 15-day exponential moving average, which is the one that I watch closely for shorter term momentum guidance, is very much pointing upwards. So still for now, everything looks fairly bullish on this chart again. If we then zoom in a bit more closely and look at the hourly chart of the S&P 500, you can see that what is significant over the last few days is the break above 38.60. That is the break above the previous highs that we saw in the back end of January, and the market is now making new all-time highs again. Once again, you can see that upward sloping channel that I alluded to on the prior chart, and that comes in at about 39.30 at the upper end. So we'll watch that as an area of potential resistance where the market maybe stalls and begins to consolidate a little bit. But overall, whilst this market is above 38.60, we've still got to remain bullish, and the picture still remains in the favor of the bulls here. Then let's take a look at the NASDAQ, and we start with a look at the daily chart here of the NASDAQ. What's interesting to point out here is the large triangle pattern that I've mentioned many times in the past that formed in the final quarter of 2020. And you can see that triangle labeled there with the waves 1, 2, 3, and 4. And then in textbook fashion, that triangle broke out to the upside, and the market has continued nicely higher since then. Now, that triangle pattern points to a target of 13,800, and the market does appear to be closing in on that target now. You can see the upward sloping channel that has been intact since November, still very much intact, and the market is still making higher lows and higher highs, and that 15-day exponential moving average continues to guide the market higher. So the 13,800 target is not far off now, and we'll see when the market gets to that point whether it catches a little bit of profit taking at the top of that channel. If we finally look at the hourly chart of the NASDAQ now, there you can also see that upward sloping channel still intact, as I alluded to before. There, the big break in the last week has been 13,600. When the market broke above that area, then it took the price back into new all-time high territory. And as I said, 13,800 is where the bigger target comes in from that breakout on the daily chart that I'd alluded to before. So overall, still a pretty bullish picture here for the NASDAQ as well. And just watch that 13,800 area in the next few days as a possible area where a little bit of profit taking might ensue. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the NASDAQ indices.